I'd suggest, Steve, the equity market has got it slightly wrong. The bond market has probably got it right. I think Trump, when he takes office in January, I think they will try and run the economy very hot for a whole load of reasons. It's just his instinct. The deficit and indebtedness, and remember, the world has never been as indebted, are looming risks. And one way to try and resolve that is to up the level of growth. So I think we're going to see a lot of bond market volatility in the first quarter. I'm personally surprised that a whole range of equity sectors haven't reacted in a more volatile way. We just saw the beginning of that on Friday with healthcare. This is the first time, I would say, since Ronald Reagan that you're going to have as many supply side reforms in the US, albeit in a much more unpredictable, chaotic way. And that has the ability, I think, to upset a lot of industrial structure, a lot of sectors. We haven't figured out yet, I think, what Trump is going to do with tech, and he's much less instinctively and socially close to the tech sector. The other thing I'd mention, just coming back from, I was in Asia all last week, and I think that the narrative in the media and the financial media is one where the rest of the world is sort of cowering in front of Trump. And I think Europe and perhaps Asia have lost control of that narrative. And I think when we do get into a trade war scenario, both Europe and China are better prepared. And I suggest as well that China will be more aggressive in their response.
Oh, gosh, so many points, Mike. I don't know where to start. OK, I'll do one more and then Karen will come in as well. The financial sector reforms, which I think a lot of our viewers are really interested in, they're pushing on an open door. I know that greed is an extraordinarily powerful thing, but American banks, investment banks, are making record profits, or certainly have done within the last 12 months as well. They trade at a price to book, which is double, triple, quadruple in some cases of the average European price to book as well. They are making record amounts of money. Their stock prices have gone through the roof, and indeed they're trading at high levels as well. They want financial and regulatory reform. It's very, very dangerous, isn't it, to get what they want, because that could further down the line lead to a similar situation that we've seen in various episodes in the last 25 years, couldn't it?
In certain segments, it could. I think what this Trump victory will do, it will unblock the sort of the hold up in capital market activity. So I think the sector that's going to win is private equity, maybe venture. I think you'll see a lot more IPO activity. Klarna has just filed for an IPO in the States. So that's really the first stage in this, I think. And I think for the next maybe 3 or 4 months, you continue to see the strength in financials because the markets expect better regulatory outlook. I will also I think the rates outlook is perhaps not going to hurt them either. I don't think rates are going to be cut much in the next 6 months, just with reference to the interview you had with Austin Goolsbee. So financials will be I think a rare area of strength. And maybe just to turn it around, it's maybe less so that the US banks are overvalued. The European ones are trading at a pittance. And I don't see there being a catalyst here for them immediately. The whole discussion around capital market union in Europe is quite frustrating because you have people at the European level pushing for it, and then it's stymied at the national level. So that really, in my view, is where the tension needs to be.
Mike,